Hello, hey guys. So the point of today's video is to introduce you to market structure. Um, what is market structure? Why map market structure? What actually is market structure when you think about higher time frames? Because that's essentially what market structure is. It's a very different way, in my mind, of looking at structure versus what you see in a lot of YouTube videos and across, trading videos on X and other social platforms. And I'm going to show you exactly what I mean and how I've actually been able to incorporate market structure into my trading in a way that helps me make money and become more profitable and confident in the markets. So what is market structure? Very quickly. So market structure is giving you a definition of whether we're in a bullish or bearish market, basically. I can also add to this a consolidating market. So price can also trade sideways. So that would be a point maybe that you don't actually want to get involved in a trade. But essentially, it's just giving you that view as to whether price is going to continue higher or continue lower. I'm not going to spend ages in this video. I mean, feel free to go and look at other ways that market structure is mapped. I've seen it done in a couple of different ways. One of the most popular is like a mechanical defined candle pullback rule. So that would be, for example, if you have more than a certain number of candles in a specific pullback. For example, here, say there were 3 candles or 5 candles. A lot of traders will use 3 candles, and then price actually breaks above the last high in that pullback leg and closes. That would be determined as a break in structure, and then that would be classed as a resistance area that we might want to trade back into, which actually happens here, to go higher. So the traditional way of mapping structure would be to use some sort of rule like that, or maybe like a pip pullback rule whereby price needs to move back by a certain number of pips before it's then traded through to determine a break in market structure to say, okay, we think that there's going to be a continuation in the same direction. Or equally, if this happens and you get a break below a structural point, we might want to say, okay, well, actually, we think that this is now going to be a level of support, which price will trade into before trading lower. So that's a popular way of structure being mapped. However, in the same way, 3 candle pullback rules or fixed pullback rules can be positive. They also do have a lot of flaws. And it works exactly the same if you see things like using highs and lows in the market. So instead of using a fixed pullback rule, you just want to see some sort of pullback, an extension through, some sort of pullback, a break and close above, and so you're then looking to go long. But then you can straight away see what happens, and this happens all the time. If you're now marking this as a low in the market that you think is acting as support, what does price do? It targets it, closes below, and so you're now thinking, oh, there's been a break of structure, we're going to go lower. But what actually ends up happening is price just trades straight through, and then what you are looking for is basically longs. And then again, what happens? You're almost like manipulated into thinking there's a structural break here. Price is going to reverse and go lower, but what happens? It just continues higher. So this is the problem with mapping market structure in this sort of systematic mechanical way. It works until it doesn't. That's ultimately the problem with these models. And when they work, they're great, but they don't necessarily help you time exactly where to get into trades. And when you are wrong on the market, it can really lead to compounding loss. There's other ways, so change in state of delivery, order flow shifts. These aren't necessarily market structural shifts, but they're price action shifts that we can use to time trades, and I do all of the time. But all of these things, they need to be used in conjunction with other trading methodologies or constructs. So the secret really is that market structure means nothing on its own. You need to have a clear view of liquidity. So where is price actually targeting before it actually wants to go higher or lower? And you need to use multi-time frame analysis. And this is where the secret really is. Because if you think about this, we can see that price is in a bullish trend. In hindsight, it's very easy to see that there is this sort of bullish action in the market. So that's with the benefit of hindsight what's happening in the market. But what actually is, for example, this price action? Hopefully this is going to become obvious, but if I just do this, you can see this is actually the price action between November and December. And what actually is this here? It's the price action for the previous month between October and November. So all market structure actually is higher time frame candles being created, which is interesting because now if we know that our higher time frame is just our market structure is a higher time frame candle being printed, then we can use previous price action to get a much stronger read on what we actually think is going to happen. Because now if I give you this piece of price action, we can then see, okay, in September to October, this was our price action. We're looking for longs. Originally what we were saying is this could be a protected low right here. So we're looking for longs. But does it make sense for the candle to go higher here? Because what has happened is price has liquidated this specific monthly candle. And I'm going to bring this to life in a much clearer way if you can't see it yet. But no, it doesn't make sense because we've liquidated an old high and we're actually in a bearish trend right there. But when we get this massive extension here, what happens? We liquidate a previous candle's low. So right here is the close, the low of the September to October candle. So as soon as we get a liquidation between below that low, and then we get a structural break here through the high, we can then start to make a much better judgment on what we think is going to happen to price on the time frame we're analyzing by seeing what is happening on those previous, in relation to previous higher time frame candles. So that might be a bit abstract right now, but if I bring these candles onto the chart, it becomes much clearer. So here are those candles. You can actually see them in the background of the 12-hour price action right now. And we're looking at swing trades. So this is the monthly candle. So the premise of trading really is to understand candles and their relationship to one another. So if you see that a candle sweeps a previous candle, it trades above a previous candle's high and closes, then what we would expect to see is that we might want to see that candle target the opposing end of the subsequent candle's range. So what I mean by that, if we just were to zoom into this specific piece of price action, we can see what price actually did is it traded through the previous candle's high and then retraced and closed at this point here above this high, below this high. So in this instance, there's really only a couple of things that price can do. It can respect this level and target the low, or it can break through this level and then probably break out of this candle's range, go higher, which is actually what ends up happening. But if it is to do that, it first needs to find a point of liquidity that makes sense for it to do that. And that's exactly what it did right here in liquidating this candle's low. So market structure, in short, is essentially just the formation of higher time frame candles. And once you understand how to tie the time frame you're on with higher time frame candles, you can get very accurate in timing trades, framing trade ideas, understanding where price wants to trade to, without having to necessarily worry about market structure. So now I don't really care about mapping market structure necessarily. I just want to understand where are the points in price where when I see a shift, it makes sense to do something. So fundamentally, that is what we're looking for. Now, if you follow my trading, maybe you follow me on X, or you're starting to watch some of my YouTube content, you'll see that what I tend to do is always use monthly, 2 weekly, weekly candles for my trade ideas. Then I'll use maybe the 6 or 12 hour to actually understand where I should execute on specific trades. And in relation to market structure, I'm going to show you exactly how you can start to bring this in. So here we're on pound New Zealand dollar, and I've got the 1 month candle here. I'm sitting on the 12-hour chart, but I've also got my mid time frame candle as well. So in this case, this could be a weekly candle or a 2 weekly candle, but you can then see it. And if this isn't clear, let me just spend a bit of time showing you. So here is the monthly candle, that darker color. So this is where it closed, and you've got the top wick there. And then within this, I've got 2 weekly candles in this instance. So there's one, and then here's another. That's another candle right there. So in this month of price action, there were 2 bullish weekly, 2 weekly candles. I'll just take them away. And what we got from a traditional market structure sense is a structural break above the high. So coming back to like, okay, if I was to map this, what does that actually mean? It means, okay, I'm looking for a continuation, but where from? This point, this point, this point, this point. You know, it does get a bit confusing. But by now incorporating a couple of different higher time frame candles here, we can actually start to make sense of this. And what we see here is that this candle, this monthly candle, closed bullish. So this candle broke above its previous candle and closed bullish. So we have a structural break, yes, but we have more information in that this candle closed above its previous candle. So in the next monthly candle, what I would look to see is a continuation. So when we're at this point here, we can start to map the actual inner structure that exists to see when there's actually a break that might want to make us place a trade. So right here we have the 12-hour order block. I'm just going to bring this forward so it's clearer. So when price is in this specific leg, you've got the order block, you've got a fair value gap, and what you see is that price enters this fair value gap, this imbalance in price, does not go higher but trades lower and creates a new 12-hour order block. So an area of resistance in the market. And then what happens is that we trade into that, trade lower, and create another 12-hour order block. So this is all I'm doing, it's just marking these order blocks. And then we get another 12-hour order block. Price does look like it might want to go higher at this point, so people might be enticed in, looking to go long. But what happens? It just retraces again and creates another price leg lower and another 12-hour order block, and then eventually another one and another one before there is this structural shift. And that is right here. So you can see price is in this downtrend here, and then we get a break above this high, a retracement, and then we go higher. Okay, so yes, we can map our structure traditionally down here, and this can help us say, oh, we want to go long, but actually we're not caring too much about that because we have our bias from looking at these higher time frame candles. What we want is a sign that makes sense, that allows us to go long. Now here we had a structural shift. This is actually the same type of price action as this action here. But if you think about it, what is price actually reacting from? Yes, we have a 12-hour order block here, but here's our monthly candle, and here is the subsequent 2-week candle. At this point, there's no liquidity. The price is not swept below this low in order to target higher. And so at this point, it makes sense that price is going to go lower. But what happens here? Here we get our structural shift, and we get our new 12-hour order block right there. But what have we done? We've liquidated this candle. So I'm just going to mark this as a 2-week turtle soup, which basically means that the previous candle has raided the liquidity below its candle. Now we get a structure shift. And this is something that we can now trade, because what we're doing is lining up, yes, market structure, but really higher time frame candle analysis with structural shifts in the market to place better trades. And what ends up happening here is you'll see we get this order block being respected. So we get higher high, lower low, and then a big expansion. And we then target the previous monthly candle's high right there. So I would argue from a trading perspective, as soon as we get a close in that fair value gap, we can say a retracement is starting to happen. We're going to see this monthly candle create its bottom wick. However, we have structure shift, bullish structure. We have a bullish monthly candle. So we want to be very conscious of getting out of this trade when it makes sense to, because we know that based on the higher time frames, price is probably going to trade higher. But at this point here, you could place a trade on this order block to target lower. And it might be that you want to target that low, or you want to just take something like a fixed 2R in here to take a short-term position on this retracement. But you don't have too much to aim at this point, if I'm honest. So it might make sense to actually wait until you get a structure shift. And you could take this as your structure shift, because what you see here is that price comes down, comes up, comes down, comes up, and creates a new bullish 12-hour order block right here with a fair value gap that you could use to target the high. But again, what we've said is that there's not really been any sweep of meaningful liquidity to drive that move as yet. So what price is doing really is trying to induce you into doing this and taking a position maybe off that fair value gap, covering the order block, to think, okay, I can get a 3R plus here, but it just stops you out before the move actually happens. And the reason for that is that it has not raided a point of liquidity that can fuel this next move. But then the exact same thing happens, but we actually have done this now. We have this 2-week structure that has allowed us to actually place a trade. And then you just take the order block right here. You get plenty of opportunities, probably a day or so of price action in the actual area that you want to get into a trade. And then you target the high, and you can take that swing position. So that is where you can start to actually use highs and lows on market structure to actually make trades in the market. Let's look at a couple more examples. So we were looking previously at GBP, JPY, and we can, just for the purposes of this being a market structure video, map what we think are the is the structure in the market, just to really bring this to life. So you could say this was actually a structural break. So price broke above an old high, retrace, price broke above an old high, retrace, broke below this low, then broke above the high, Then we had this like very corrective pullback, break above a high, no retracement in this instance here, break above the high, break above the high, and break above the high. But again, without the benefit of higher time frame candles, can you see how hard this would be to actually implement a trade idea from? Because yes, you might get some sort of long in here, but then you probably get stopped out. You probably then think the market's shifted structure, I'm going to go short. It hasn't, it goes long. You're trying to get into a long here, you keep getting stopped out. Then we do get a long, you're waiting for a retracement, so you don't take advantage of any of this price action. However, we then used higher time frame candles. And I'm just going to show you what I was looking at the time in the market. So instead of using the 2 week here, I was using the weekly time frame. And this then becomes just so much easier because you can see we had liquidation of this candle's low. So I'm just going to mark that as a monthly. Actually, I'm just going to bear with me, mark that on our chart here. So, okay, so this is an indication that price traded below that monthly low. Great. Then what we see is that this entire candle, this monthly candle, closed above the previous candle's high. So in the exact same way, what are we looking for? We're looking for continuations higher. If we wanted to go lower, then we would have liquidated this candle and just continued here with this bearish price action down to this level. That didn't happen. We traded through. So now we're looking for continuations. However, if you think about it from a time perspective, what are we expecting from this monthly candle? Are we literally expecting price to just go like this and be a huge candle right up within this monthly period? Probably not. So all this candle wants to do is just break above and close above this candle's high. Once it does that, then we have something much more interesting because we know we're looking for continuations, and then we can start to map structure in the exact same way. So you've got this 12-hour order block right here, and then price eventually starts to make its downtrend. So you've got another 12-hour order block here. So you've got this price action. We do get a shift. But it doesn't sustain. You get another order block. And then eventually you get this new bullish order block. And if this looks confusing, it's going to shift quite quickly when I show you what's actually going on. So monthly candle closes. This is at this point, this monthly candle is closed. We then get a very bearish candle, which looks like a structural shift for us to continue lower potentially. However, what we get instead is a true market structure shift with a fair value gap in that price leg. And what have we actually still had? We've had a break below and a close inside this weekly candle. So there it is. I'm calling that a weekly turtle soup right there. And if I show you this on the weekly time frame, it's even clearer. Bearish weekly candle, liquidation of the low, close inside. We now want to target the opposing end of that candle's range. So if we now come back here, we can see this quite clearly. Price came down, shifted, new order block, and you can see if I actually zoom in right here, fair value gap, imbalance in price that gets respected. And then essentially we have a very high probability trade here, because what do we have? If we build the story of price, we have previous candle being liquidated, monthly candle closing above the previous candle's high, and then we have what we need in terms of fuel for a move higher, new monthly candle liquidation of a previous weekly candle's low, and a true market structure shift that makes sense. If you wanted to wait, you actually can. So now we get a shift, and we're looking for our next area of price action to get involved. And we're going to go through actually timing entries, but you can see, if I just take this away now, what actually happens here. We just look at this specific area of price. You have order block already marked, and then you have fair value gap right here. And then what happens? You get new order block right there, and then you get new fair value gap there, which again gets respected to go higher. So you can very easily time trades off these areas, knowing that you have very clear targets to hit. Firstly, the previous weekly candle's high, but ultimately, because we know that the monthly is looking to continue, the monthly high, and then from there, sky's the limit really, because if this candle is to go higher, what then might it want to reach for? And that's when you can go onto the 6-month, 12-month candles to say, okay, what is the purpose of those candles? So it's fairly advanced, this type of thinking about price, but it's tying together higher time frame candles, lower time frame price action, and market structure within there to actually time entries when it makes sense. And this is swing trading. You get a lot of time to work this out because each of these candles is 12 hours. But if you were to have placed a long there by covering the liquidation, or even let's be conservative and cover that weekly low and target the previous monthly high, you've got a 2.6. Then, you know, you can risk off and just hover below these lows maybe. I mean, we could continue to monitor price action, but if you were to be still holding this trade, it just goes on and on. 6R right now. I'm going to show you one more. So this is a trade that I took, and I'm just going to show you it on the 2-week time frame. This is silver, and we can just see exactly the same thing happening. So let's forget about market structure and trying to map everything in here and see what does and doesn't make sense. Let's just look at the higher time frame candles. So you have this candle here, and what happened? The next candle right there, sorry, it's a little bit more, closed above the previous candle's high. So this was the point it closed, and you can see it closed at this level above its high. So again, we're looking for continuation. So this point here going into the new month, we are looking for continuations, and we're looking to target at least this high here. Then we have our 2-week time frame here, because that's what made sense when looking at the market. And what happens? You have this bearish 2-week candle. Everyone's thinking this is over, silver's going down. But what happens? Price is trading lower in this bearish way. So we have bearish structure in the market. Then we get this here. We're expecting price to go lower. What happens? Get a little bit of consolidation, and we break above higher. And in this 2-week candle, we have a liquidation of a previous 2-week candle's low. So 2-week turtle soup, I'm just going to add that on here. Bring to front. Okay, so at this point, once this candle closes, we have a liquidation of this candle's low. So the monthly high right here and the 2-week candle high, which are the same high, become the target for the trade. And so straight away, even right here, you could just take an entry. But again, it's just easy to just map our current price time frame price structure. So we have 12-hour order block. We get a new one right here. I'm not going to mark them all as 12-hour. going to show you this. Another one here. And then what we see, I think, is, do we get a fair value gap? No, we get one there. So we get price coming into this area of supply, starts to be respected here. So you're still within this middle candle right now. You might think, okay, this is going to go lower. It doesn't. We get a new 12-hour order block right there. And then the move happens. So you could have an order on this area right here that doesn't get tagged, or once you see this structure shift here, which is what I did, you can get involved off that level. Just cover the low right there and target the high. And this was like a really frustrating trade, because ultimately trading is hard and you're constantly fighting against manipulation, but ultimately that was the target right there. So price starts its expansion, and then we do get a retracement. If I just take this away for a second and we just bring on the weekly candle, let's see what actually happened. So the weekly candle closes above this previous weekly candle. So again, we're looking for longs. The price still wants to sweep as much liquidity in this range before it goes higher. So the next great trade that you could have taken is just to be patient, to wait in that specific week as this downtrend starts to take hold. And then when you see this shift where this specific candle here starts to get disrespected, we get a new 12-hour order block, and then like the previous example, what do we have in this leg? We have order block, and then we have fair value gap. We have the context now to take a new long entry. So we can go from the fair value gap, cover the low, target the high. And that would be a 1.7 hour trade. So you've got that. Or if you did get involved here because you just were ahead of the market, you were waiting for this, you've got a 5.7 hour trade. But then comes again the beauty. If you then just scale this and you just hold it under these lows and you just wait patiently, I mean, so much exponential upside. Silver's slightly unique, but I'm not gonna lie, I got out of this high. Wish I held this trade. But you can see the power of combining structure with higher time frame candles, and this can be done. Price is fractal, so you can combine time frames in any way you wish, but it's really about painting a story between candles that make sense, so that you can act on structural shifts when they make sense in the market. So this has just been hopefully an informative video on what is market structure, why it's important to map market structure and when it isn't important to map market structure, and giving you a very strong idea of how to combine price action on one time frame with higher time frames to actually make sense of what is market structure and what it's doing, and that is forming higher time frame candles. See you on the next one.